All right, hi everyone. Welcome to today's webinar brought to you by IronFX, where we'll be covering the live trading session. I just want to make sure you guys can hear me loud and clear and see my screen as well. You should be looking at the first page of my presentation slides, IronFX webinar series live trading session. All right, and if you have any requests for any analysis that you would like to be done on any of your currency pairs or commodities or indices, do let me know. I'll be more than happy to go through the analysis with you. Right, so do not hesitate to drop your requests or questions in the webinar chat box or the Q&A box as we get things going. All right. All right. Okay. Just let me check everything. All right. Okay. So everything looks good here, I believe. All right. I believe audio and video is good. All right. So as usual, before we kick things off, let's quickly go through the disclaimer. Do take note of the risk warning that comes with trading products on margin and on IronFX. They carry a high level of risk, and it is possible to lose all your capital. Also, take note of the disclaimer. Right, the information in this webinar should not be considered as investment advice or an investment recommendation, but instead just educational material only. All right. Okay. Just checking one more time with regards to right audio. Yes, everything looks good, and screen as well. All right. Okay. Right. Okay. So my name is Ketan Ramachandra. So I'm an investment analyst here at Everest Fortune Group. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years: 2019, 2020, and 2021. All right. So just a very simple agenda for today. We'll just quickly look at what are the key economic events for the rest of the week, and then how it could impact the direction of currency markets or indices as well. All right. Okay. So we had the FOMC minutes, which were released yesterday. Right. This was released at 7 p.m. GMT time yesterday. So we basically, as what has been going on over the last couple of weeks, right? Many Federal Reserve officials have come out to say that they're pushing back against aggressive interest rate cuts, right? Because in December's meeting, the markets and traders interpreted the Fed's late FOMC meeting as being quite dovish and with aggressive interest rates coming up in 2024. But since then, many Fed officials, including Chairman Jerome Powell, have quickly pushed back against cutting interest rates too aggressively and too soon as well. As we saw with last week's CPI data and PPI data, inflation is still a concern. We saw CPI data accelerate, and we saw PPI data too accelerate on an annualized basis. So that means inflation is not falling as quickly as it has been in the last few months. So with inflation being stubbornly sticky, the Fed is likely to keep the federal funds rate at its current level of 5.25 to 5.5%. So maybe even a potential rate cut in the FOMC meeting for the month of March may be pushed back as well. All right. Okay. Then we'll look at the calendar for the rest of the for today and for tomorrow. Right, we've got PMI data coming up. Okay, we've had the EU PMI data being released. We also have the US PMI data that will be released at 2:45 p.m. GMT time. We also have unemployment claims in the US at 1:30 p.m. GMT time. So let's see how could unemployment claims potentially drive demand for the US dollar later today. Right. So as you can see, unemployment claims are basically benefits that are claimed by American citizens when they're out of a job. So when you have falling claims, like as you can see, the trend here since middle of 2023 till the end of the year, when you have a trend that's heading lower, right, with unemployment claims trending lower, that means that less people filing for unemployment benefits. So that signals a robust US labor market. And that would also mean that the Fed is likely to cut interest rates anytime soon, right? The strong labor market means the consumer is still strong, the consumer is likely to continue spending, and that could mean inflation is likely to remain sticky or stubbornly persistent. But however, as we've come into January and February, we've seen over the last 4 weeks, unemployment claims have started to shoot up, right? It looks like it's beginning to trend higher. So when you have unemployment claims trending higher, this potentially signals some softness or weakening of the US labor market, right? So how can we interpret this data? right? It's quite simple, right? Okay, so we have the forecast for this week at 270,000, and last week's figure was 212,000. Right. So if we get actual data that's going to be higher than 270,000, this is potentially going to function as a bearish catalyst for the US dollar. Why is that the case? Because when you have more people than estimate filing for unemployment benefits, it signals a potential weakness in the US labor market. And then that could typically function as a bearish catalyst for the US dollar. So that would translate to currency pairs such as the euro, pound, Aussie, Kiwi, and commodities like gold to rise. So the weaker dollar will push all these instruments higher. Conversely, should claims come in lower than the estimate of 270,000, that means there are less people filing for unemployment benefits. So that signals a relatively resilient US labor market. And this is bullish, or this would be typically be bullish for the US dollar. So potentially it could cause currency pairs like the euro, pound, Aussie, and Kiwi to fall, along with gold prices as well, right? The stronger dollar is naturally going to cause, or typically will cause gold prices to fall. And of course, stronger dollar, with a stronger dollar, we're going to see currency pairs like the euro, pound, Aussie, Kiwi all fall as well. Right, so do take note of how we can interpret this data later today. It's going to be released at 1:30 p.m. GMT time, and is likely to drive the demand for the direction for the demand for the US dollar later today. All right, okay, so with that, let's move on over to TradingView and start our analysis session. Right, okay, so here I am on the dollar index, right? I'm on the 4-hour time frame. As you can see, the dollar has been pretty weak. Okay, before we do that, let's look at it on the daily time frame, so it's easier to visualize the trend for the dollar. So as you can see, since the beginning of January, the dollar index went from about 100.85 to as high as 104.93 last week. So it has been in a pretty strong bullish trend for the last 5 to 6 weeks. However, since the middle of last week, we've seen the dollar index pull back. So basically that means demand for the dollar is falling off, and we saw the dollar go from a high of 104.95 to currently to about 103.55. So you can see the trend for the dollar is to the downside. It does seem to have lost its bullish momentum. And if I were to draw a trend line as well, right, we saw price bouncing off this trend line here once on 2nd of February. However, it has now broken through this ascending trend line, which sort of gives us an indication that the bullish momentum that we saw for the first 5 weeks in 2024 looks like it's quite likely come to an end. So basically the dollar is weak, or demand for the dollar is weak, and that causes the dollar index to fall. Especially today, it's falling quite strongly as we speak. All right, so we can see this is the general trend for the dollar in 2024, and we can see it now does certainly look like it has reversed its course. So it looks to be heading lower, at least for the next couple of days, right? Okay, so with that, you can see this was the ascending trend line that was broken on Tuesday, and price made a low of 103.46 today, and it's retraced a little bit higher. Right, so with that, let's try and analyze the charts and try and identify where are the significant support and resistance levels, and how could we potentially trade the dollar index as well. All right, so if you look across this price level here at 104.15, this does look like a pretty decent overlap resistance level, right? I'm going to use this level here to identify. Here we go. I'm going to use this level here to identify my first resistance at 104.18. Right, this is my first resistance at 104.18. Let me zoom out a little bit. Right, we can see price finding decent support here last week on 15th of February all the way till the 20th. Earlier this week, price found decent support here before finally breaking under. And when it finally broke under, we can see since Tuesday, price has failed to break above this level, thus creating an overlap resistance here. Right, so we can see price has failed to break above this level this week, and we can see that this is a pretty significant resistance level, which is what we're going to use to identify as our first resistance at 104.18. All right, if we zoom out a little bit here, we can see that the second resistance at 104.95 is a pretty significant overlap level as well, right? Because when you look here, back on 6th of November, price found strong support here on 6th of November last year for retracing higher and then reversing to drop lower. And then as price came up to this level once more, last week it ran into resistance again. So this signifies a significant resistance level which we're going to use to identify as our second resistance. So this is another overlap level that's acted as strong resistance for the dollar index this year. So this is how we've identified the first and second resistance levels. Now, what about support? Right? Okay, so we look at support level here. This was previously support level here for just highlight this so you can see why we had identified it as previously as a support level, right? I'm just going to highlight it as a dotted line, green dotted line, right? So previously this level here at 103.81 functioned as a pullback resistance level from 23rd of January till 1st of February. You can see price failed to break above this level here. And then when it finally broke above it, you can see that it sort of found support close to this level here from the 7th of Feb till the 13th of Feb before moving higher. And then as price came down, it managed to find support here on Tuesday, bouncing off this level, retracing a little higher before finally breaking through it. So of course, this level now is no longer going to function as a support level. It may potentially function as an intermediate resistance level, right? It may function as an intermediate resistance level here. And the next major support for dollar index would be around this price level here at about 102.93. Right, so if you can look across this price level here, it's another pretty decent overlap level. Why is that the case? Right, you can see as price came rising up in early January, it's failed to break above 102.95, and then as it broke above this level here in mid of Jan, it found support several times. Right, it found support here on the 23rd of Jan, 24th of Jan, 31st, and also the 2nd before moving higher. Right, so you can see this level here previously price ran into resistance. Okay, let me change this to green. Sorry, let me change this to red. Right, so price previously found resistance, then after it broke above it, it found support once, twice, 3 times, 4 times before bouncing higher. So quite clearly, this is a significant overlap level, which is what we're going to use to identify as our first support. And if you look a little bit lower, across this price level here, you can see another support level as well, 102.08. I'm going to identify this as our second support because we see price finding strong support here on 5th of January till the 12th of January before bouncing higher. Similarly, it made a pretty decent pullback support level here on the 19th of December last year. So you can see quite clearly this is also another significant pullback level for pullback support level for the dollar index. Right, there could also be a Fibonacci retracement, a couple of retracement levels that we could use. I'm going to start the retracement from here. 28th of December, going up to the high here, which is on 13th of December, I believe, with 50 and 60. Yeah. All right. So we can see, okay, 60 doesn't align very well as it should with the second support, but you can see the 50% align quite well, right? Because of the wicks here and because of this support level here. All right, so we're not going to use 60, we'll just keep 50. So you can see that this level here is indeed a pretty significant support zone for the dollar index. The dollar index first major support is between 102.77 and 102.96, right? So right now that we know where are the key support and resistance levels, how can we potentially trade the dollar index, right? So as I mentioned, this intermediate resistance level here at 103.81, right? So we could, as you can see, that this current candle price is currently retracing a little bit higher, is pulling back after making a low of 103.47. It is currently trading about 103.57. It could potentially continue to retrace a little bit higher, but should price stay under this intermediate resistance at 103.81, it may give us a good opportunity to short the dollar index, right? So if it manages to stay under 103.81, you could have a good opportunity to short the dollar index, and where we could potentially target a suitable take profit area would be around the vicinity of the first support. But do take note, we have got unemployment claims coming out today, so that's likely going to function as a pretty strong catalyst for the demand for the dollar. So do take note of how we can interpret the data which I mentioned earlier and how it's likely to drive the direction for the dollar index. So I would probably wait for the data to be released before making a call on the direction of the dollar index, right? Because that data point is likely to create pretty decent catalyst, and then we could see that momentum continue as the US session gets underway, right? So do take note of the upcoming data and how it could impact the direction of the dollar index. All right, okay. So these are the key levels for the dollar index on the 4-hour time frame. Right, okay, so I'm going to move on to the euro. I'll cover a couple of the major FX pairs, and I'll look at gold, WTI oil, and of course, if you have any requests for the indices or the crosses or any other commodities or any other instrument, do not hesitate to let me know. Do drop your request early into the chat box so that we have time to go through the analysis together, right? Don't leave it to the end, because then right, I simply do not wish to rush through the analysis with you, right? So do drop your request in early and we can go through it together. All right, okay. So let's look at the euro. So of course, if demand for the dollar has pulled back this week, or rather since the middle of last week, then naturally we're going to see currency pairs like the euro rise, right? So as you can see, since the middle of last week, the euro bottomed at about 1.0700 and has continued to move higher quite strongly, right? So we can also see a pretty decent descent up, ascending trend line as well on the 4-hour time frame, right? We have a pretty decent ascending trend line here, signifying the strong bullish momentum since the middle of last week. Right. Okay, so with the euro currently trading about 1.0863, it made a high earlier today as euro markets open at about 1.0887. It's pulling back as we speak. Potentially, we can continue to capitalize on this bullish momentum here. So how would we do that? Right? Okay, we're going to use the combination of the ascending trend line, as well as going to be looking for a pullback support level here. That 1.0825 does look like a pretty decent pullback support level. So let's do the analysis of where we could identify a potential pullback level for the euro. All right, so let's zoom in a little bit here. We can also use a Fibonacci retracement. Okay, I'll do the Fibonacci retracement after. Let's find the levels first. Right, so if you look across this price level here at 1.0823, price running the resistance here earlier this week, pulling back, finding support on the ascending trend line before bouncing to go higher. Right, so this region here would probably be a decent place to identify a potential pullback level, right? The intersection between the ascending trend line and this pullback support level here at 1.0823. This could be a good area or zone to identify as a potential long entry for the euro should it pull back towards this level here, right? So this is where we can identify, because this is like a, I would identify this level as intermediate support level, right? I would identify this as an intermediate support. So I'm going to use this as support dotted, and should price pull back towards the vicinity of 1.0822, which is basically the intersection of this pullback support level and the ascending trend line, it may help us identify a pretty decent long opportunity or bullish bounce for the euro. Right, now for the first major support for the euro would be at this price level here. So when I look across this price level here at 1.0798, right, we can see price finding strong support here, making a pretty decent swing low bounce here on the 1st of February. And then as price broke under, it found resistance. It found resistance here on the 12th of February. And once again, as price broke above it, it found pullback support here on the 21st before going higher. So we can see multiple instances where price has reacted off this level here at 1.0798, which tells us that this is actually a pretty significant overlap support level. So that's how we have identified our first support for the euro. All right, okay, with regards to the second support, when I look across this price level here, right, at 1.0744, this also looks like to be a pretty significant pullback support level. Why is that the case, right? We can see price making a strong pullback here on 8th of February, and then again on the 16th of February. So we see two instances where price has reacted on this level quite strongly, and it's and I think that if price reverses, and continues to drop lower, breaking through the ascending trend line, breaking through the first support, where it could then potentially find the next major support would be at 1.0744. All right, are there any Fibonacci retracement levels? Let's see if we can line up any retracement levels with the support that we had identified. Perhaps we can 50 and maybe 78.6. Yeah, so there's 50 and 78.6. So we can see that not only are these levels, this overlap level and the pullback level here significant because of price action, we can also see that the 50% and 78.6% Fibonacci retracement levels align very well with them as well. Okay, with regards to the resistance, right, we can see quite clearly here on the 2nd of February, price running the resistance at 1.0892, which is a level where price does seem to have stalled once more today. Right, so you can see back on 2nd of February, as price rose very strongly from 1st of Feb all the way to 2nd of Feb, price stalled at 1.0890 before reversing to drop lower, and it does look like it has happened again once more today. Right, so if you had been long the euro, right, if you had been long the euro today, right, if you had been long the euro today, I would have used this first resistance or the vicinity of the first resistance as a potential take profit for the euro. So so if today, let's just say, or not today, but since yesterday, right, we see price making falling towards this pullback support and bouncing off this level, and as price was coming higher, if we had initiated a long position on the euro, right, I would have identified the vicinity of 1.0890 as a potential take profit zone, right? So I'm looking for resistance levels, major resistance levels to identify a potential take profit zone as price is rising up. So you can see quite clearly here, price failed to break above this pullback resistance level at 1.0890 and it's proceeded to drop quite sharply. So it's dropped almost about 35 pips now, right? It's dropped almost 35 pips since running into this resistance. So by identifying major resistance and support levels, it helps us to identify long entries, and also helps us to identify potential take profit zones as well, right? So this is why it's important to do our analysis on at least a 4-hour time frame to establish and identify the key support and resistance levels, and then we can use these levels to help us identify potential entries, be it long or short, as well as identify potential take profit zones, whether you're long or short again, right? All right, so this is where the first major resistance for the euro is. Second resistance would be around here. I see an overlap level here at 1.0922. I see a pretty strong overlap level here. Why is that the case, right? Right, we can see price finding decent support here on 8th of Jan, 9th of Jan, and you can argue here 11th of Jan as well, before finally breaking lower. And then once it broke lower, it made this small swing high resistance here before dropping. So you can see price has reacted off this level several times, be it as support and resistance. So thus creating a pretty significant overlap level or resistance level, which we're going to use to identify as our second resistance. All right, so do take note of that. Right, so how we can use this second resistance is, should price break above the first resistance at some point next week or maybe tomorrow, and it manages to stay above the first resistance at 1.0890, and if the first resistance offers a pullback support and price then continues to climb higher again, then I would use the second resistance to help me identify as a potential take profit zone for price. So that means, should price then bounce off 1.0890 and climb above 1.0900, and as it's rising, I would use the first resistance to help me identify my potential take profit zone, right? So that's why it's important to identify resistance and support, so that we can then Then, of course, identify or determine suitable take profit zones or areas. Okay, so this is what we have for the euro. Okay, I'm just going to zoom out a little bit. I believe there might be a Fibonacci retracement that we could potentially use from here. Okay, we're going to start the retracement from here. 28th of December, this swing high resistance going down to the swing low here on the 14th. We can see that the 50% Fibonacci retracement level aligns pretty well with our second resistance. Is there a 38? Perhaps there is. No, there's no 38, right? So we just keep the 50%. So you can see that the 50% Fibonacci retracement also aligns quite well with this overlap level here at 1.0925, which adds significance to this resistance area. All right. Probably I'll just highlight it as a zone rather than an absolute level, since we got a Fibonacci here as well. Let's just highlight it as a zone. All right. Okay. So with that, I will move on over to the pound, and then after the pound, then we'll switch over to the commodities. We'll do oil, we'll do gold and oil, and of course, if there's any other requests that you guys would like to see. All right. All right. So let's move on over to the pound. So similarly, of course, with dollar index losing steam since the middle of last week, of course, we're going to see the pound rise strongly. Similarly, there is ascending trend line here for the pound as well. Right, prices bounce off this trend line several times. Now the resistance with the price market structure for the pound is not so clear as it was for the euro. So in terms of resistance levels, like this part here is really choppy and really messy. It's kind of hard to identify any major resistance point. But if I were to try and identify something, perhaps it would be a level here. Right, I probably identify this as an intermediate resistance level, right? You can see price running into resistance here on 29th of Jan and then 31st of Jan, right? So, and it does look like price for the pound does seem to have stalled close to this level here at 1.2720. Right, so potentially this could be the first resistance levels for the pound at 1.2720, and where I see strong resistance would be this pullback level here, or this multi-swing high resistance level here, right? We can see price making a swing high resistance. Where's my brush? Here we go. Price making a swing high resistance here on 24th of Jan, and another swing high resistance here on the 2nd of Feb, right? So creating this multi-swing high resistance. So this is really identifying a pretty significant resistance level for the pound, and that's why I've identified it as the first resistance. Right, and moving a little bit higher, the next resistance for the pound would probably be here, and we can see once again price making a swing high resistance here on 14th of December last year, and another significant swing high resistance here on the 11th of Jan. So creating another multi-swing high resistance for price. Right, okay, so these are the levels for the pound. Right now, since the dollar is weak and the pound is pulling back, where could we potentially identify a pullback support level for the pound? This level here does look to be pretty good. This does look to be like a pretty decent pullback or overlap support level here. So if you look across this price level here, right, you can see price making a very significant swing low bounce of 1.2657 on, what is this, 23rd of Jan, then finding support once more on 30th of Jan as well as on the 1st of Feb. Of course, we can see the wicks of the candle protruding below the support level, but generally you can see the body of the candle has actually managed to stay above this support level. And similarly here, as price came rising up, on 12th of February and 13th of February, you can see that it acted as a resistance barrier once more. Of course, we have the wicks protruding above the level, but generally you can see that this overlap level at 1.2657 is indeed pretty significant. And should price continue to pull back, it may offer us a pretty decent opportunity to get a bullish bounce. So should price pull back, find support here and continue to go higher and then rise from here, it may identify a good buying opportunity as well, right? Similarly, also look at where the stochastic is, right? On the 4-hour time frame, you can see stochastic over here, back in early Feb, indicated oversold conditions. Similarly here, on 14th of February as well, indicated oversold conditions once more. So you can see clearly this was indeed a swing low for the pound both times, right? So you try to look for significant swing lows so that when we get the bounce, right, the bounce higher from the swing lows, we can get a pretty significant move up, right? So we can see here the pound going from about 1.2540 to about 1.26, almost 1.2640, right? So this is almost a 100 pip move from the 6th of February till about, so in the period of like 24 hours, 36 hours, we can see the pound has bounced almost 100 pips here. So similarly here, uh, after making this swing low here from about, let's just say 1.2550 till here, about 1.2630, so probably about 70 to 80 pips. So of course, this price never moves up in a straight line. There's bound to be pullbacks along the way, but you can see that when we try and identify potential swing lows, right, we do get a really nice bounce. Similarly here on the 16th of Jan as well, price finding support at about 1.2610 before reversing to go higher. Right, so you can see how by looking at the stochastic levels, stochastic oscillator on the 4-hour time frame does help us to identify significant swing lows for the pound, and then it then gives us a good opportunity to identify a potential long entry as well to capture the upswing, right? To capture, basically, we're looking for the next upswing here, right? Okay, so these are the key levels for the pound. Okay, and one more thing, I just highlight the second support level. We've done the first support. The second support level would be this pullback level here, which is at 1.2611, right? So this would be the next support level for the pound, right? Okay, would there be a Fibonacci retracement? I believe there should be. There's one retracement from here. Then we can, we'll start the first retracement here on 2nd of Feb, going down to the low here on the 5th of February. Perhaps that's the 78. Yeah, I don't think it's 61. Maybe it's more. Yeah, so we have the 78.6 aligned very well with this pullback resistance level here. So let's just keep 78.6 and get rid of the rest. So you can see the 78.6% retracement level aligns pretty well with this pullback level that we had identified at 1.2721. All right, now let's try and do another Fibonacci retracement from here. This low here on 14th of February going up to this high. What do we got? Is it 38 and 50 perhaps? No, sorry, it might be 23 and 50. Let's see. No, we don't really have. Okay, let's pull up all the fibs so we can see it together. I would probably just use the 61%. Yeah, that aligns quite well with the second support, right? It's quite close to where the second support is. And I would identify this as a support zone rather than an absolute level here, right? Yeah, so this is a major support zone for the pound. All right, okay. If not, if there's no other requests, or sorry, there's no request, then I'll just move on over to the commodities. Let's just cover gold and then we'll look at oil as well. All right. Okay. So with dollar prices falling, right? Of course, it's usually falling dollar will act as a tailwind for gold prices. So that's what we've seen since the middle of last week as well. Gold going from what $1,919 per ounce, coming to a high as 2035 today. So it does seem to have run into resistance around this level here for now. So let's see where the major resistance levels lie. All right, so the first major resistance I would do see for the pound, for the dollar is around here, right? You can see as price was retracing higher, it ran into resistance and dropped, And then as price came up once more earlier this week or middle of this week, it has failed to break above this level. Today, it did peak above this level a little bit, but once again, it has retreated below. So this does look like to be a pretty significant pullback resistance level here at 2032.15. Right, with regards to the second resistance, it would be this pullback resistance level here. Right, you can see price making a little retracement to the upside here, but running into resistance and then dropping sharply. And similarly, on the 7th of Feb, price rising into this level once more before stalling and proceeding to drop lower. So 2042.23 does look like a pretty significant pullback resistance level, and I'm going to use that to identify it as my second resistance. Right, what about support? I do see a pretty decent overlap support level here. This is at 2022.33. Right, price running the resistance here on 19th of February, then we broke above it. We can argue here it found decent support here on 20th of Feb and finding support once more on 21st of Feb before going higher. Right, so you can also see stochastics here, the stochastic oscillators seeming suggesting potential overbought conditions here. So we may see price pull back a little bit. So if you have been shorting gold today, for example, after seeing that this is 2032 is a pretty decent resistance level, and with price failing to break above this level here, and if you do have any short position for gold, where you could potentially identify a suitable take profit would be in the area of the first support at 2022, right? So you can see a price running to resistance here on 21st of February, and then stalling before dropping lower, and it found strong support here on this latter part of 21st February as well. So you can see once more, price has been rejected by this level, and should it continue to drop lower, it's quite likely it's going to find support once more at about 2022. So if you have been short gold and it's continuing to fall, where you can identify a potential take profit would be around the first support, right? So which is 2022.33. Right, what about the next support for gold? I do see a pretty strong support level here. Right, I can even drag it back as far as here. The 2014.24 is my second significant support for gold prices. Why is that? We can see it found decent support here from 24th of Jan till 25th of Jan for a period of 2 days. Basically, price consolidated around this region before bouncing higher. Similarly, here on 5th of February, as price came crashing down or falling down quite strongly, it managed to find support just above this level before swinging higher again. Right, this is a significant swing low. Then once again, as price came falling down on 12th of February, it found strong support again before retracing a little bit higher and then breaking down. So you can see these are significant pullback support levels here. And when price broke above this level, it acted as a support once more. And you can argue here as well, this level also acted as a little bit of resistance before breaking higher. So this is indeed a pretty significant level at 2014.24. Alright, so do take note. So should price come back down towards the first support and then bounce off here, right? And this also helps us to identify a potential long entry on the pound, right? So should price continue to fall, the first support helps us to identify a potential take profit for any short positions, and then should price consolidate around this level and proceed and reverse to bounce higher, it helps us identify a potential long entry, and similarly then the first resistance will help us identify a suitable take profit zone, right? So this is why we identify support and resistance levels to help us identify long and short entries, as well as identifying suitable take profit levels. All right, okay, so these are the key levels for gold. Let's see that the Fibonacci retracements that align well with the levels that we identified earlier. Right, so I'm going to start this retracement here from this swing low here on the 14th of February, going up to the swing high here on the 22nd. I think it might be the 38 and 50. Let's take a quick look. Oh, no, it's not 30, 23 and 38, I believe. Yeah, so it's the 23 and 38 Fibonacci retracement levels that align quite well with the first and second support. Similarly, I could possibly use a Fibonacci retracement from here, this high on 1st of Feb, going down to this low on 14, maybe 50 and 61. Probably I could just 61, 78. No, let's just keep 61, right? And highlight it as a zone here. So you can see it should, oops, that this resistance here, this zone here rather, is pretty significant resistance here for gold. All right. Okay. So these are the key support and resistance levels for gold. Do take note, similarly, because we have unemployment claims coming up, that is going to drive the direction or drive the demand for the US dollar. So do take note, naturally, if the US dollar is going to jump following the release of that data point, then we are quite likely to see gold prices fall. And then if consequently, or not consequently, conversely, if demand for the dollar drops following this news release, then it's quite likely it's going to act as a strong tailwind for gold prices and it's going to push it higher, potentially push it above this first resistance. All right, okay, there's a question here. All right, hi, morning, Alinda. All right, good to see you have joined us. Yeah, if you have any requests for any analysis on the instruments, currencies, crosses, commodities, or indices, do let me know, and I'll be more than happy to go through the analysis with you. All right, if not, let's just move on over to gold, okay? No, not gold, sorry, we're done with gold. Let's just move on over to oil. All right, so the instrument here for oil, I'm using WTI oil. All right, sure, I can cover US 30. I'll do it after we cover oil. All right, great, sure. I'll definitely cover US 30 as well. All right, so yesterday, or rather Wednesday, price found pretty decent support here at about 76.51, right? This is also close. Okay, it wasn't exactly close to where the previous pullback support level was, but it was sort of within the range. And then as prices started to go reverse higher, you can see price for WTI oil found support within the bullish Ichimoku cloud. So usually when price is falling into the bullish Ichimoku cloud, which is green in color, the cloud can typically offer a strong support zone as well. So we saw price finding support here before reversing to go higher. Similarly, we also saw the stochastic oscillator come very close to indicating potentially oversold conditions, and then the oscillator bottomed and reversed to go higher as well. Right, so you can see the combination of the bullish Ichimoku cloud and the stochastics, right, does help us to find potential support areas or turning points for price action as well, right? So in terms of support level, the first major support for WTI oil would be at 76.55, and second support would be this pullback level here, right? That occurred not once but twice, once on 12th of February and then on the 15th of Feb as well. So here we go. This is the second support for WTI oil at 75.46, right? So as price has bounced off this level here, right, and you have any long WTI oil positions, where would you identify a suitable take profit level? That would be around here, right, the vicinity of $78.20 per barrel. So you can see price running the resistance here on 14th of February, and then from 16th of February till Tuesday this week, price has failed to convincingly break above this level. And it does seem, once again, price does seem to have stalled within the vicinity of $78.20. So because we have identified this resistance level previously, right, and then as price is rising up, and we have gone long on oil, on WTI oil specifically, we would be looking to identify a potential or suitable take profit zone in the vicinity of $78.20 per barrel, right? So that's why, once again, it's important to identify resistance and support levels, because they really do help us identify entries, very suitable entries and exit points. Okay, with regards to the second resistance for crude oil, when I zoom out a little bit, I see this price level here at $79.33 as a significant resistance because it is a multi-swing high resistance. Right, we can see the first month swing high taking place on 14th of November 2023, the second swing high resistance taking place on 30th of November 2023, and the most recent one was in Jan, coming up in 26th of Jan before reversing to drop lower. So we can see three significant swing high resistance. So this resistance level is known as a multi-swing high, and that's why I've used it to label as my second resistance at 79.23. Right? Okay. So similarly, should price perhaps maybe tomorrow or next week manage to break above the first resistance at 78.20, and then the level of 78.20 serves as a pullback support level, and should price bounce off this level to go higher, then I would use the area or the zone of the second resistance to help me identify a suitable take profit zone. So I'll be looking at about $79.20 per barrel to help me identify the next suitable take profit zone for WTI oil should price then continue to move higher, right? And of course, then the first resistance, if price breaks above it, I'll then be looking to use the first resistance as my first pullback support level. And if price manages to bounce off that level, that would also help me identify a pretty decent long entry as well. All right, okay. I believe we can also do a Fibonacci retracement from here, 5th of February, going up to this high here. Yeah, this is the absolute high here on 19th of February. Maybe it's the 38 and 50. Oh no, it should be 23 and 38 again, right? Okay, so 23 has already been broken. We're not going to use that. We'll just use 38%. All right, here we go. So this is the support zone, second support zone for WTI oil. All right, okay, with that, then we will we'll move on to US 30. Let's do US 30. So the instrument that I'm going to be using for US 30 will be Dow Jones 30 or DJ 30, right? It's the same instrument, but just labeled differently here. All right, okay, so let's just start with a clean slate in terms of support and resistances. So similarly here, when I'm going to 4-hour time frame, right, where you can see the stochastic oscillator dip under 20 or come close to 20, it does help us to identify a potential reversal point for most instruments, and then it does help us to identify a potential long entry for each particular instance, right? So here you can see Dow Jones finding support at about 38,200 roughly, and then of course nothing goes up in a straight line. It's bound to be pullbacks, but you can see generally it did rebound quite strongly off the support, swing low support here to climb as high as about 38,760. Similarly here, price managed to find support around 38,400 and has managed to climb quite strongly, coming as high as 38,850 today. All right, so do take note of how we can use the stochastic oscillator as well to help us identify potential reversals, right? Similarly here, right, back on 18th of Jan, you can see price, the stochastic oscillator similarly once again, highlighting a potential oversold condition. And once more over here, and here's a bit more messy because it's not so clear, right? You can see the oscillator actually dipping under 23 times, signifying oversold conditions for a slightly longer period of time. But here it was a bit more clearer. Price essentially made like a double bottom before going higher. This is pretty clean, right? On the price action on 13th of February, price action was pretty clean here. This was a little bit messy as well. But you can see generally it does help us to identify potential swings, swing lows, and then that gives us a good opportunity to identify potential long entries for DJ30 or US 30. All right, okay, so in terms of support and resistances, right, this pullback support level here, right, you can see price finding decent support here at 38,469. I would use this level to identify as my first support. Similarly, I would use this price level here at 38,137 to help me identify as the second support. So we can see here price finding support here on 31st of Jan, and then once again on 13th of Feb around here. Right, okay, so the first resistance for DJ30 would be this pullback level here at 38,789. We can see price failing to break above this level on 15th of February as well as on 16th of February. So as price was coming up here quite strongly here, I would have been looking at this price level at 38,789 as a potential take profit for any long positions when price reversed, right? We saw the stochastic indicate potential oversold conditions, and as price started to rise higher, perhaps from about 38,600 onwards, right? 38,600 onwards, I would be looking at the vicinity of 38,800 as a potential take profit zone. Right, so this is where I would identify my first resistance for Dow Jones. And of course, with price trading at all-time highs, right? This is the all-time high. When we look at the weekly time frame, you can see quite clearly, right? Dow is trading at all-time highs here. And also you can see here quite clearly on the weekly chart, price stochastic oscillator going under 20, highlighting a potential oversold conditions. Similarly, price has also managed to find support within the Ichimoku cloud. Remember, the cloud is green and price is falling into it. Typically, it can offer support, not always. Right here, you can see back on March of 2022, price did find support within the Ichimoku cloud, bounced a little bit higher, but it wasn't a sustained move, right? Here, this time you could see it can function as a very strong support level and go higher. So do take note, not every cloud is going to offer the same level of, or we're not going to see the price action being replicated every time when we see certain indicators line up. But you can see here quite clearly on 23rd of October on the weekly time frame, stochastic oscillator indicating oversold conditions as well as price finding support within the green Ichimoku cloud, and price did bounce very strongly here. So once again, just with Dow Jones trading close to all-time highs, it can be quite difficult to identify the next resistance level. So let's try and give it a good go where we could potentially identify the next resistance level for Dow Jones. I would try, okay, the first resistance is here, 38,789. Second resistance, I would use this level here, 38,903. Now, should price continue to go higher from here, how would we identify the next resistance? Right, we don't have anything else in the past because price has never traded around this level here. So we can try and use perhaps a combination of a Fibonacci extension and a Fibonacci projection. So first I'm going to use the extension. So the extension is found by just using a retracement starting from the 12th of February going down to the low here on 13th of February. So extension levels are basically levels greater than 100%. So that means the key Fibonacci extension levels are at 137 and 161%. All right, so let's just line this up for now here like this. Pardon me. All right, okay. Just line this up here for now. Now, the second part of it, we're going to use a Fibonacci projection. The projection uses this Fib extension tool. So this involves 3 points. So I'm going to start from here. The first point here is on 13th of February. The second point here is 16th of Feb, and I'm going to end with the third point here on 19th of February. All right. So the key projection levels are at 61%, 78%, and 100%. So as you can see, price has reached the 61% Fibonacci projection already, running into resistance here. So that's already told us, so we can get rid of that. Where you can see 78.6 and 100%. 78.6% aligns quite well with the second resistance. And then we can see the 100% projection level aligning quite close to where the 137.2 extension level lies. So we're going to use the combination of these two Fibonacci levels to help us identify the next resistance zone should price break above first and second resistance, right? So if we do see a bullish breakout for DJ30, right, if you see it break above, especially if it breaks above this second resistance here at about 38,900, then and it goes past 39,000, where it's likely or where it could run into resistance would be within the zone that I've highlighted between the 127% Fibonacci extension, and the 100% Fibonacci projection. So should we see a potential bullish breakout next week for Dow Jones, right? And if equity markets continue to push higher, then where it could run into resistance would be in this zone. So I would then use this zone to help me identify a suitable take profit area. All right. Okay. So I've come towards the end of today's webinar. Right. I hope this has been a great session for all of you. Right. Before we go, I'm just going to launch a poll. Truly appreciate it if you guys can give your feedback on this. I just leave the poll running for about 30 seconds or so. Just give you guys enough, give all of you enough time to respond, and then we'll just round things up. All right, I think most of you have responded. That's great. Thank you so much. Truly appreciate it. And right. All right. Okay, I think that's pretty much it. All right. Thank you so much for giving your feedback. And okay, I'm going to end the poll now. And all right. So just before we go, do take note. It's quite a busy calendar for Thursday and Friday. But do take note, we've got US unemployment claims coming up later today. And then do take note, so how can we interpret the data? So as you can see, the last 4 weeks, claims have come in higher than expected. They've started to trend higher. So when claims are coming in higher, it typically signals some softening of the US labor market, which then means the US dollar could become weaker. So this is how we can interpret the data. So for this week, the estimate is for claims to come in at about 270,000. So if the actual result is greater than 270,000, that means there are more people filing for claims than estimated. So that means this could potentially indicate the start of the softening of the US labor market, which is then potentially bearish for the US dollar. So that would then could cause currency pairs like the euro, pound, Aussie, Kiwi, as well as gold prices to rise. Conversely, if claims come in less than 270,000, that means there are less people filing for unemployment benefits. So that signals a resilient US labor market, and then that would usually translate into a stronger US dollar. And then if that were to happen, then of course currency pairs like the euro, pound, Aussie, Kiwi will fall, and gold prices are likely to fall as well. All right, thanks everyone for tuning in into today's webinar, and yeah, I wish you all the best in your trading journey, and do look out for today's data as well as tomorrow. All right, take care everyone. Have a great trading and have a great end to your trading week. Right? Okay, take care and thank you so much. All right, thanks, Peter. Thanks for the kind words. All right, Jihad, we had covered US 30 as well. I'm not sure if you were late to the presentation, but there was a request for US 30 and we had covered it right at the end. Right. Yeah, so right. All right. Basically, otherwise, thanks everyone for tuning in, and I'll catch you guys at the next webinar. All right, take care, and I'll see you guys soon.